Tim, how bad was this reversal for Hong Kong stocks?
It's pretty crazy. You think back in the start of the summer, we saw a 10% rally into early September, and we've essentially given the whole thing back. And it's interesting, it's not just the Hang Seng, it's China, it's Hong Kong stocks in general. There's a really interesting item that we've delved into, and that's looking at the China stocks that are listed in Hong Kong. They too have suffered a lot, down something on the order of 7% since early September. You can see on this chart. Versus the China stocks, if you look at the Shanghai 180 index, they're actually up 5%. Now, this is not a matched set, but there's a lot of overlap. And you can look at other indices and find the same thing. This is indicative of possibly global investors and what they've done in terms of bailing out of Hong Kong with the Occupy situation.
Do you think that that had something to do with it?
Well, I think that's part of it, certainly. I mean, there was a building up of tensions over the course of September. We've actually done further analysis on this, looking for companies that, you know, are $1 billion in market cap, that have got 50% of their revenues from Hong Kong. There's 45 of those stocks that trade here in Hong Kong. They're all down. You know, the retailers, the property stocks, you know, are high on that list. But there are other factors, too. You think Tencent, which is a big Hong Kong listed stock, you know, it's going against Alibaba that did their IPO. Maybe there's a selling Tencent by Alibaba. You just mentioned Apple. When Apple launched the iPhone 6, the China telecom stocks came down. China Mobile, China Telecom, China Unicom. Maybe that was because they didn't have an iPhone to begin with. Maybe it was just a sell on the news.
And Macau stocks, also big movers.
Big time. And, you know, that was clearly going down, and they've accelerated the decline. They're down 18% over the month of September.
But this all in advance of what we're all expecting, which is the Hong Kong-Shanghai Connect, right? What is the date? Monday?
Monday the 27th,
the 27th
is what's anticipated
of this
at this
month.
point. Yes. And, you know, I think that was a lot of what had taken the stocks up in terms of enthusiasm. I mean, I think there are a lot of investors who look at buying into China through Hong Kong before things open. And a lot of that has faded, which goes back to that first chart that you all had shown. Now, this is an interesting thing to take a look at. The AH Share Premium Index, which shows the dual-listed stocks that trade in both Shanghai and Hong Kong, and how those two relate. And so if you look, this is showing an A-share premium. So this is China local shares trading at a premium to their cousins in Hong Kong. And that premium had dropped to where it was a 10% discount back in early September, and now it's gone back basically to parity. It's right around the 100. Now, the interesting thing here, this is just on the surface. It's a market cap weighted index. It's really skewed by the banks and the energy stocks. If you look on average, this is what you get. And there's 70-odd stocks that trade in both, you know, dual-listed pairs.
Dual-listed pairs,
The A shares trade at a 32% premium right now, which is up versus a month ago at a 20% premium. So the premium is expanded because the Hong Kong stocks have fallen. The interesting question here is, do mainland investors sell the A's to buy H when they can come late October? Because there's clearly a disconnect in terms of those premiums. There's a lot of other dynamics that play into it. It's pretty interesting stuff.
And whether or not they are even aware, if they're allowed to be even aware of what's happening in the streets down below, and getting a sense of how that might affect sentiment, but we don't know because they likely don't know either. Okay.